Welcome to Odisal Associates, Accounting and Finance Tutors. Today we are going to continue with our concepts in business combination. We have looked at some other concepts before today, like contingent consideration and acquisition-related costs. Today we are going to look at another concept, reacquired rights. Reacquired rights are rights that were previously granted to another party but are reacquired by the acquirer in a business combination. Now let's look at it this way. A had another company, B, that they were not related at a particular point in time. And B acquired a right from A. At that time, they were not related. Subsequently, A now acquired B. As A acquired B, the rights that B acquired from A has not been fully amortized, but A have now acquired B. When A acquires B, the rights that B acquired from A will still be there in their statement of financial position. There will be a carrying amount. That carrying amount is what is known as reacquired right, because it was previously sold by A to B, and now A has acquired B. Because of that, the right that B acquired from A before has now been given back to A because of the acquisition. That is what is known as reacquired rights. Accounting treatment for reacquired rights. Under IFRS 3, reacquired rights are recognized as intangible assets. We recognize the acquired rights as intangible assets after the business combination has taken place. That's post-business combination, or what is called post-acquisition statement of financial position. The rights that was acquired will be reported as intangible assets. The acquirers are recognized as intangible assets separately from goodwill if they meet the definition of an intangible asset and can be measured reliably. Now, we must look at this concept. For a right to be said to have been reacquired, it must meet the concepts and have to be measured reliably. In fact, anything that cannot be measured reliably cannot be reported. But if it can be reliably measured, then it will be reported as an intangible asset, separate from goodwill. Measurement of reacquired rights. Reacquired rights are measured at their fair value at the acquisition date. It's also important for us to note that when you are measuring reacquired right, it has to be at fair value. We've looked at assets that were measured at fair value when we are looking at contingent consideration. There will be a time when I am going to teach fair value separately so that you understand. But for this concept, let's look at it that assets, the acquired rights are measured at fair value. We're looking at the value that an asset can be bought or liability settled at a given accounting date. Reacquired rights are also amortized over their useful life, which is a period over which the acquirer expects to benefit from the rights. Now, let's look at the two companies we have on the board, A and B. B acquired a right from A at a particular point. Let's say the value of that right is 500,000. This 500,000 will be amortized over the period of time that B set as a useful life of that right. Let's assume that B says that these rights I've acquired from A is going to be amortized over 10 years. Over 10 years. So that's the useful life of the rights. And most of these are amortized on straight line basis. So every year, B is going to charge 500 over 10, which will give us 50,000 per annum. This will be amortized in the statement of profit or loss of B account. Now, if B has amortized this right for 3 years, that will be 150,000 naira that has been off this 500,000. And then A acquired B, let's say 100%. What it means is that A has also acquired that right they previously sold to B. However, it has been acquired at the carrying amount. It's no longer at that 500,000. The carrying amount will be 500 minus 150,000, which will give you 350,000. So the 350,000 balance of the acquired right is what is known as reacquired rights. It has been amortized for 3 years. The remaining 350,000 will also be amortized over the remaining period. Note that it will be amortized at the fair value of the rights at the date it was acquired. If the fair value has changed, it therefore means that they will not report 350,000. It's the fair value as at that date that they are going to amortize. Reacquired rights can also be impaired. Therefore, it has to be tested for impairment annually or when there are indicators of impairment. If there is anything shows that the value that was attached to the acquired the rights no longer subsists, then it has to be remeasured or revalued so that the fair value of the rights will be reported and not the carrying amount of the reacquired rights. Disclosure requirements. Nature and extent of required rights. Disclosure of the nature and extent of required rights, including the rights, description, and period over which they are expected to benefit the acquirer. So this must be part of the disclosures that will be presented in the financial statement. Disclosure of accounting policies for reacquired rights, including the method of amortization and impairment testing. You will also indicate the method of amortization, and if there is any impairment that was recognized, you also have to disclose that. Now, the reacquired rights are things like there are intangible assets like trademark, copyrights, patents, brands, and so on. These are types of reacquired rights. Reacquired rights can arise in various contexts, including business combination, or what is known as merger and acquisition, M&A, in licensing agreements, intellectual property transactions, brand acquisitions. Now, this is what we see as reacquired rights. We're going to use a question to illustrate reacquired rights. I'll read out the question and then we'll get the solution. Entity A acquires entity B in a business combination. As part of the acquisition, entity A acquires a trademark license that was previously granted to entity B. The trademark license had a remaining term of 5 years and was expected to generate significant revenue for entity A. The fair value of the reacquired trademark license is 100,000 required. Determine the accounting treatments for the reacquired rights. Calculate the amortization for the first year. Solution. Accounting treatments. The reacquired trademark license is recognized as an intangible asset separate from goodwill. The reacquired trademark is measured at its fair value, and in this case is 100,000 naira. Amortization will be for 5 years. Like I said, we normally amortize using straight line method. So since it is 100,000, it will be 100 over 5, which means for every year, they are going to amortize 20,000 naira. Okay, so now we pass the entries for the amortization. At acquisition, we are going to recognize the intangible asset that was reacquired. The intangible asset that was reacquired. So it will be debit, credit, intangible asset. $100,000. Cash or consideration paid. 100,000. Reacquisition of trademark. Now, this will happen at acquisition date. The next thing is you amortize the reacquired right at the end of the period. We have already computed the amortization amount, which is 20,000. 100,000 divided by 5, because it's 5 years, is 20,000. So in this case now, we are going to debit amortization 20,000 and we'll credit amortization, accumulated amortization 20,000. Amortization expense actually. This is to amortize the trademark rights that was reacquired. This one we have recorded the acquisition of the rights or reacquisition of the right, and then again we have now recorded the amortization of the rights. This amortization will continue for 5 years. At the 5th year, it will turn to 0 or 1 as the case may be, to continue carrying it in the book in case the rights is still useful to the organization. At the end of this year, the balance of the amortized right will be 80,000. Now, we've said that this will be tested for impairment as the year goes. And it's also going to be measured at fair value. So if the fair value increases, it means it will increase. If there is impairment, it means it will reduce. Okay, we are going to try another exercise where we may have to calculate goodwill. I'll read it out. John PLC bought a franchise from Amosco Nigeria Limited, who is a high-tech company. The rights was bought for 50 million naira in 30th of June 2010 to be amortized for 50 years. The amortization will be distributed equally over the months of the useful life of the assets. And John makes up its account at the end of December every year. However, Amosco Nigeria Limited acquired John PLC on 31st December 2021, when the total intangible asset of John PLC was 80 million. Other intangible assets inclusive. The company also has tangible assets of 100 million. The MD of Amosco told the accountant that he should take note that John PLC bought the franchise from them, and therefore this is useless, so he does not want to see it in their books. Required. 1. What should the accountant of Amosco PLC do? 2. How should Amosco treat the franchise that is still in John PLC? 3. What is the value of the franchise at the date of acquisition? Solve this question in the comment section. I will provide the answer later. Thank you for listening. I have to give you an exercise to show that you are actually following and learning, so that when you try it, you'll be able to know if you understood what you were taught. And then if I see trials in my comment section, I will put the solution, the model answer to the question. Thank you very much. Continue to watch, continue to follow, share with your friends. Thank you very much.